Hey everybody, welcome back to my channel. I'm Justin Vierra with the Vierra Group, and today I want to share with you a few tricks on how to get a lower interest rate. Yeah, so when it comes to interest rates, there are a few things that we can do to alleviate some of the pain that we've been feeling with our, sort of high rate market. One of them is, really considering the term of the mortgage. So for some people who are likely putting a really large down payment down, maybe they're selling their home and they're buying a new home, you could consider something between just a shorter term. So instead of 30 years, which is very traditional and normal for people, you might look at a 15-year loan. And the interest rate between them is lower. It is marginal, and it's not for everyone because you have to really be putting down a big chunk of money to make sense. But that's a consideration. But the other thing that's a consideration for people in terms of the loan that they pick are what are called ARMs, or adjustable rate mortgages. And these aren't the mortgages or adjustable rate mortgages that we saw back in like 2007 or just before, the great financial crisis. These are fixed term rates, typically 30 years, but the fixed part is for the first, say, 10 years, sometimes 7. And you get a lower interest rate. And a lot of people are looking at that because they're thinking, well, I'm looking at, close to 8%. And I know as soon as rates come down, I want to refinance. And 7 or 10 years feels like a comfortable window for me to go into this loan at a lower rate and then look for my opportunity in the next 7 to 10 years, worst case, to refinance. And we think most likely you'll probably refinance in 2 to 4 years, maybe it's 3 years, but certainly 7 or 10 years feels like a comfortable amount of time to get that done and get out of the ARM. Now, I'd say this is probably not something for your first time home buyer that's, maybe putting 5 or 10% down. This is going to be for someone who is putting closer to 20% or more down, probably not their first purchase. And if it is, they're probably a high income earner. So there's still a ton more to unpack with this topic. So stay tuned for the next video on this. Of course, I'm Justin Vierra with the Vierra Group. If you have any questions in the meantime, reach out to me. Otherwise, I look forward to seeing you on part 2.